Hey guys, welcome back to another weekend edition of The Trading Edge. This is a weekly video that I do where I have the chance to show you the best opportunities that are on my radar for the week ahead. If you're brand new, my name is Akil Stokes. I'm a Forex trader, trading coach, and one of the co-founders of Tier1Trading.com. I'm also host of the Trading Coach podcast, which is consistently rated and ranked as one of the most popular trading and Forex-based podcasts out there. So make sure you check it out if you haven't done so already. I've got a lot to look at today, so we're not going to dig into as much details as we usually would, mainly because some of the opportunities are going to be repeats. So once we do it the first time, we can kind of just touch on it and be like, hey, this is very similar to the previous pair. But of course, for you guys on the platform, we will revisit these throughout the week in our live trading rooms and of course on or in the Pro Trade Log. Also, big shout out to everyone that attended our meetup this morning, our Daily Chore Mastermind meetup. It was fantabulous, right? It will be posted on the website soon. I'm going to put it under the Q&A session. I may eventually put it under the Daily Chore training session as well. And speaking with the traders, this is something that we want to do consistently. So if you weren't able to attend this one live, make sure you mark your calendar for a month from now. We're going to do it again, update you guys on our progress, and keep digging and hammering away at different ways to really optimize this awesome strategy. So it's pretty cool. All right, let's hop into things. Let's take a look at the pound yen. All right, so let's start off on the pound yen. I'm on a daily chart right now, and the first thing that stands out to me is a potential advanced pattern formation. I think we have a pretty obvious swing high to swing low right here. This is going to be a picture perfect impulse leg. And if we take a look at that as being our initial move, our X to A, and this first retracement being our our A to B, we see that our A to B extension, or retracement, excuse me, this came out of two meetings, so my brain is all over the place and I'm very hungry. We see that our A to B retracement came to our 50% level, but did not hit the 618 level. So that means we're on alert for what's called a bat pattern. We followed it up with another extension down, and what we would expect for the completion of this pattern is for our D leg to reach all the way back up to this 886. Now, although the 886 is the completion point, right? It doesn't mean the market has to or will reverse at this level. Everything in the market, in my opinion, goes off a zone. So this is the start of our potential reversal zone, with the end of that potential reversal zone being at the highs of our X leg. So everywhere within that zone is going to be a place where you can potentially enter. Now, something you need to be careful about in this scenario, and I'm not a big fan of this, but we have another higher level of structure that exists right above this level. So this is what I like to call overlapping levels of structure. We have a structure high here. We have another structure high right here. Whenever we get overlapping levels of structure, the one that is the furthest away is going to be the most important one to me. That is the one I worry about. So if I'm looking for safety as far as a stop loss, I would like to have it above this level. Now, fortunately, I don't trade the daily charts, or I don't trade advanced patterns on the daily chart, so I don't have to worry about this. But just make sure when you measure out that risk reward, if you're able to maintain your risk, if you're able to, I would advise getting above that level of structure, because tricky things tend to happen where a lot of traders think this is going to be a safe level, price comes up, spikes them out, and then goes in their initial projected direction, and you get one of those trading opportunities where you were right but kind of wrong. And I know for me, those are the worst ones, where I just get skunked out and then the market goes on to do what I thought it would do in the first place. So be careful. If you can't put your stop loss up there or adjust entries or anything like that, then sometimes you just got to eat it, right? You always want to follow the plan. But for those of you who do have some flexibility in how you approach these advanced pattern formations, that is something you want to be aware of. Something else we can look at, I'm not a big fan of this either because of the daily close. You're going to see that price action did come to an inside level of structure. We probed that level but didn't close above it, and this is why it's not as great an opportunity for me. But if you're someone that's a little bit risky, you can always go down to the 4-hour or the hourly as well, and you may have a pullback opportunity in advance of that bat pattern completion, meaning that price action comes back to our previous level of consolidation right in here. Look for your opportunity to buy it up, and then you can trade it to that projected decompletion. Again, we're not getting the type of signal that I would like to see on the daily, but I know that we all trade different ways, and my job here, especially for you guys on the platform that are listening, isn't just to say, hey, my way of trading is the only way. It's to give you different options and different ideas so that you can make it your own, and find opportunities that meet your personality and ultimately meet what will eventually be your trading plan. Next, we're going to head over to the dollar yen. And this is a perfect follow-up to the pound yen, because whereas the pound yen did not give us a nice, for lack of a better term, daily close, the dollar yen did. You can see the difference. With the pound yen, we had the high wicked candle that tested that level and closed below. Here on the dollar yen, we did get a higher high, higher close. And this allows me to follow through with the rest of my predictive analysis, right? IPDE is the process that we follow. Identify, predict, decide, execute. Is a 4-step process. Trust me, if you do not have a process in your trading, you're going to find it very, very hard to be consistent. If you're not consistent, you're not going to be consistently profitable. And in fact, while I'm at it, let me just plug this real quick. I did an article the other day on Medium. Let me see if I can find it real quick. I think I shared it, but I didn't, like most things, I didn't really make it too public. But if you get a chance, read this article on Medium. I'll put a link in below this video, but it's called a 4-step process to drastically improving your trading, or to drastically improve your trading. It talks about that IPDE process and how we use it from a technical perspective in the market. So if you're someone that's more interested in that concept, make sure you check out this article and give it a like or thumbs up or whatever you can do to say you enjoy it. Just leave me a comment underneath this video. That works too. So we have the higher high, higher close here on the dollar yen. So my projection is that we're likely to continue higher. Now, the one hurdle in the way that makes this not a great opportunity is that we are currently at the previous level of structure that I would expect price action to go to. And really these wicks down here, that's what kind of throws things off. Now, if I had to make a smaller bubble within this zone, if I had to make a smaller prediction, this is the level that is really on my radar on where we can extend to. But again, it just makes it one of those situations where it's a good trading opportunity in my opinion, but not a great opportunity. So you got to keep that in the back of your mind. So as we go down to the 4-hour here, we see that throughout the week, right? We've had some big high momentum moves, and then we kind of faded off throughout the middle of the week before extending again. And I was sick all this week, so I really wasn't paying too much attention to the market. But I did come back on Thursday and Friday and saw some very big fundamental reactions, one of which being the non-farm payroll, which in my opinion is an absolutely absurd number. I think the projection was like negative 770, and we ended up being plus 250, which is, you know, I'm calling shenanigans on that. I think it's one of those things where we have a FOMC statement coming out next week. We have a whole bunch of other mess happening in the U.S. I think it's one of those things where it's agreed upon to, hey, let's flood the market with some good news, and maybe it'll take some of the light off of other things that are happening in the world and in this country, and maybe it sets us up to do what we want to talk about at next week's FOMC statement. So that's just my conspiracy theory, but you ask around, it would be no surprise if that was it. But anyway, it doesn't matter. We don't trade fundamentals. From a technical perspective, what that means is that I wouldn't be surprised if we saw a little bit of a relief. I wouldn't be surprised, and we saw it to end the day. I wouldn't be surprised if the market opened up again on Sunday and Monday and people started digesting the news a little bit differently and saying, hey, we had this initial big reaction because there was so much deviation from the result and the expectation. But now that we think about it, are we really going to look at it as being that positive? And if that's the case, we may see some type of relief, right? We may see price action come back into this level. And if we do, just like with the pound yen, that's going to offer a pullback trading opportunity where you can look for the pullback into this this failed rising channel, and then look for an extension back up to that previous level of structure that we talked about here on the dollar yen. The next chart that we're going to is the dollar Canada, the loonie, and this is going to kind of follow through with our theme of it's an opportunity, but it's not a great opportunity in the market, and I'll talk to you a little bit about how to make those adjustments, but we'll give you some background information, right? If you guys remember weeks ago, we were looking at this descending triangle on dollar Canada. We broke down to the downside, live room, we're looking for a move to 135.30s. We got that no problem, but the market has continued to keep moving a little bit, and there is room to continue lower. Now, I don't think there's a massive amount of room to continue lower, but there is some room. And if we do something like this, I'll show you how. If we take our Fibonacci extension tool from the top of our triangle here, descending triangle to the bottom, to the high, the low, and back up, you're going to see that we have a 1618 Fibonacci extension right down here, about 133.50s. We can also take our Fibonacci retracement tool from our swing low, so to move preceding the triangle to our swing high. And you're going to see we have a 786 retracement right in that level. So we have two Fibonacci levels right on top of each other. If we take this a little bit deeper and just kind of go back to the basics of reading a price chart, this is why it's important. I know a lot of you guys, if you're unfamiliar, we set our courses up so that we don't really talk about actual trading strategies until about the fourth course, right? The basics, foundation, foundation 2, then the mastery. And we put a big emphasis on just learning how to read price without thinking about how do I trade it? How do I trade it? Because when you think about how to trade something, you're automatically going to be blinded. You're looking for the answer. You're not looking for how to solve the equation or answer the question. And many times traders get a little bit frustrated because they're seeing things, but they're not seeing the light at the end of the tunnel. They're seeing, hey, I'm learning all this stuff, but how does it practically apply to the market? I don't know. And then they're a little bit lost. This is a perfect example, right? All of those boring exercises we talked about where you're drawing in ebbs and flows, ebbs and flows, ebbs and flows, right? All this boring stuff, right? Well, what do these ebbs and flows become? Well, if we zoom in a little bit, zoop, these ebbs and flows become kill zones, and these kill zones become potential target areas for where we're looking to take trades. So you can see right at the bottom of this kill zone, this structure swap area, where you have previous structure support right there, which is at a level of previous structure resistance, lining up with that 1618 extension and that 786 retracement. That could be even handle number as well, a little bit below there. Didn't even see that. This could be a level in which you project an extension to. So this stuff does come in handy when it comes to overall market analysis. Now, if we go down to the 4 hour, again, I said this isn't the greatest opportunity in the world, but it is an opportunity. If we go up into the 4 hour, or maybe even, let's stay in the 4 hour, go to the 4 hour, we see that before our recent break and close lower, we had a little bit of consolidation here, right? The market kind of based out. We went sideways for a little bit. If price action can come and retrace up into this level, and if you can get an entry reason at the higher end of this level, this is going to offer a pretty decent shorting opportunity, right? This may not be a great trading opportunity, but we talk about being being fluid in our trading, making adjustments, right? One of the adjustments that I make in my trading is that the better the trading opportunity, the more aggressive I can be, right? And that goes for targets, that goes for entries, right? All of the above. I don't call it worse, but the less good the trading opportunity, the more conservative I be. So the more conservative I am with my entry technique, I'm looking for more clues in the market before I actually enter the trade. I'm also looking for stuff like a very small risk and a very big reward, right? So if we look at this situation right here and we're looking to trade it down to right above that 133 even handle, and again, I don't know where that signal is going to come to, but we know that stops need to be above this level. If price goes above that level, we're wrong. So you can set yourself up with a very good risk reward where you're risking a little bit to gain a lot. And it's one of those situations where because that risk reward is so great, it's worth it to be in a little bit of a riskier situation just because that payoff is going to pay off even more than what it normally would. So not a great opportunity, but an opportunity, and it could be better depending on how far price retraces up and if you can get a very, very good risk reward potential out of it. All right, so we talked about, we're going to be on the Aussie dollar here, next. We talked about the IPDE process a little bit. Let's review this, right? Identify where is price trading at, right? Well, look left, structure leaves clues. We are right at, wrong tool, we are right at a previous level of structure. So when I look at the market and I see this previous level of structure, I am only thinking, how can I get short? How can I get short? How can I get short, right? We call these levels, or I call these levels, decision points. So based off of how price reacts at these decisions, at these levels, the decision points, that's what tells me which way to make a prediction, right? If we hold structure, I'm only looking short. If we violate structure, then I'm shifting my mindset to looking long. And that's important because, we can always make a reason to get long or short at any time in the market. That's just how the market moves, right? If everyone was looking in the same direction, it would never move anywhere, right? Everyone would agree upon price. So there's always that debate. And the problem that many newer traders face is that they don't know what to look for. They see, oh, well, this would be a reason to get long, but this would be a reason to get short. But I can get long doing this, but I can get short doing that. And they have all these reasons floating around, and they get that paralysis analysis where they just freeze up because they're confused. So the first thing that we want our traders to do is decide, which way do you want to be involved? And then once you've decided on that way based on your analysis, right, not just a thought or a feeling, based on the technicals, lock in, and instead of splitting your focus 50 getting short, 50 getting long, 100% of your focus is on that direction, and it's going to allow you to see things a little bit clearer. It's going to give you a positive confirmation bias. So when I see price action currently trading at structure, I'm only looking short, right? I can care less about a long. If we violate that structure, my opinion will shift, but right now I'm 100% looking for reasons to get short. And just like we spoke about with the dollar yen, right, we saw that earlier in the week. We had some high momentum bullish days before kind of, decreasing that slope towards the end of the week. And this is going to form a channel as we go down to or a pattern, I should say, as we go down to the 4 hour. This is going to form what I call a rising wedge, right? It is a loss of momentum pattern. It basically means that there is a lot of buying activity, a lot of buying pressure going up, going up, going up. And then we got to the point where the buying pressure slowed down, and that could be one of two reasons. One, price got to the point where it was so expensive that less people were interested in buying, right? Imagine yourself at a grocery store. You have your favorite product. You want to buy it when it's on sale. Once the price gets higher, you're like, I want it, but not at this price, and there's less interest. Another thing could be that the buyers that were interested before, right, those buyers that got involved down here during the break, guess what they're doing? Well, at some point, they've got to take profit. And a previous level of structure is probably a good place to take profit. And if you're a buyer and you need to take profit, what are you doing? Say it with me. 1, 2, 3. You're selling, right? So that selling pressure increases not only because you have new sellers that are interested, but your previous buyers or some of your previous buyers are becoming sellers as well. So when we see this type of pattern formation, I typically look for relief, which means a move down. So that's what you should be aware of here on the Aussie dollar. You have a rising wedge, which happens to be at previous structure as well, giving you a very nice place to put your stop loss above those structure highs. Decent trading scenario here. All right, so another opportunity on my radar is going to be on the Euro New Zealand. Now, the Euro New Zealand is very similar to what the Euro Aussie looks like, and Euro Aussie has been our pair of the year so far. Over the last month or so, we have just milked that thing for all it's worth going down. In my opinion, the move is over now on Euro Aussie, but Euro Yen still has opportunity, or Euro New Zealand, still has opportunity. And this is going to be a trend continuation opportunity to the downside. And what's important is this, right? We're on the daily chart here. A break and close below this level, again, allowed us to identify a violation to the bearish side and allowing us to make a prediction that we're likely to continue bearish. We did consolidate for a few days in the middle, and then we ended the week with another lower low, lower close. So just adding more confirmation that we're likely to continue bearish. We look back at our charts and kind of the same concept we talked about with, I think it was dollar Canada, right? Just use your ebbs and flows, right? Measure out the swings of price action. And as you can do so, you're going to be able to create these kill zones, right? And these are going to be very good at predicting levels in which price either will go to and retrace, or which price will go to and hold or whatnot. So you have a nice area down here in which you can make a projection. We can add some fibs to that later as well, but for time's sake, we'll keep this simple. Go down to the 4 hour. Right? Maybe we will add some fibs right now. Go down to the 4 hour. We see another area of consolidation. This is going to be your potential reversal zone for a move down. So if we can pull back into this area, look for that extension and that continuation down, right? And we can go all the way down to about that 72 cent level. Plenty of room. We're trading at 173.50s right now, so that's 150 pips. If we retrace, right, we can retrace as high as about 175.80s. So there may be 200, 300 pips of potential profit in this move. So certainly if you're a trend continuation trader, a pullback trader, in my opinion, this is one that should be on your radar for a short. All right, lastly, this is going to be a little bit of a review. This is Aussie yen. It's going to be very similar to Aussie dollar, so we're not going to spend too much time on it here. But look left, Structure leaves clues. We're currently trading at structure. We actually probed structure. I love when we see that, meaning that we tested the highs and we got rejected. We closed below. We head down to a 4-hour chart, and guess what we're seeing? Same thing, that rising channel. So that loss of momentum pattern right into structure. Pretty easy situation right here. Again, we're looking for relief, meaning we're looking for a little bit of a retracement. Stops are going to be easy, right? Because we're trading at previous structure highs. So we don't need to stretch those stops out more than they need to be. We know that if we violate these highs here, these 76, 73 levels, we're going to be wrong, right? So you can have a very tight stop and a very decent risk reward out of this situation. So Aussie yen, very similar to Aussie dollar, simple pattern formation, rising channel, or excuse me, rising wedge into previous structure. So I hope you guys enjoyed today's video. If you haven't done so already, make sure you check out the 14-day trial on our platform, right? It costs you $1, so that is 7 cents per day to have access to an awesome community, have access to trading courses, have access to software, have access to live trading rooms. I don't know how many other ways I can say that it is well worth your 7 cents and some. But check it out. Just head over to tier1trading.com, or I'll put a link in the description box below this video. Hope you guys have a great weekend. And of course, before you leave, do me a favor, hit that like button, share this on social media, and leave me a comment. Let me know what you think. All right, until next time, plan your trade, trade your plan. Take care.